Morning, everybody. It's the 26th of February. We're Signal Centre Talking Ball. I'm joined by Ian Coleman and Steve O'Hare. Morning, guys.
I just wanted to do this for Bogdan, sorry.
Shit Creek.
He just said, "What's Shit Creek?" Because you can only see the bottom bit.
Yeah, up Shit Creek without a paddle.
Yeah.
Yes.
Survived.
Ish. Well, you have, you have survived. You've actually survived it. And today's Ian's last Talking Ball, everyone.
Yeah. It's
That's me. I'm off.
Yeah, done. He's off to not Shit Creek, hopefully.
I have no paddle.
Hopefully sailing far away from that.
Yeah, hopefully get a bit of sun on me back at some point.
Yeah, that'd be nice, wouldn't it? Yeah, waiting for the restrictions to lift, and then you're off, are you? Where are you going to head? Out to see your pal?
Well, I think I'll go to Barbados for a little bit. Nice.
Very nice. Send us a postcard.
Yeah, I will do, mate. Every day.
Don't overdo it.
No, it's just lots of Skype chats and Facebook pictures.
Yeah, happy days. Okay, cool. Well, on Ian's last day, it's all going on. Fairly chunky moves across various markets. Swift reversal across a lot of the US indices, led by the Nasdaq 100 that had its biggest drop since October. Investors rotating away from the lockdown winners, and we're seeing the US Treasury yields spike to a one-year high. So obviously when Treasury yields spike higher, that means effectively the risk-free rate of return is increasing. So it raises a question as to whether or not investors should be investing in risk-free assets such as Treasury bonds and government debt, as opposed to riskier assets like the stock market. So that's why we're seeing this rotation underway at the moment. It wasn't all rotation away from riskier stocks, though, because Gamestop was back in the news again. The shares continuing their resurgence yesterday, and at one point doubling for a second straight day, putting it down to the fact that there may have been an activist investor tweeting a picture of a McDonald's cone, of all things, with some reading it as an indication that he'll attempt to repair the retailer in the same way that he did with the fast food chain's dessert machines. So quite a bit of an interesting story there.
Wow.
Yeah,
that's good enough, isn't it?
I just thought it was more buyers and sellers.
Yeah, well, apparently I saw there was a company searching the Reddit feeds and saw that GameStop mentions were spiking a good couple of days before the actual price did. So
yeah,
you know, they have obviously onto a bit of a winner there in terms of trying to discover alpha in that way.
There was a tweet from Deep Fucking Value, the guy that sort of like had the big position first time around, and he loaded up again. It's about 6 days ago.
Right. Okay.
He still has obviously his April $12 calls that he paid 20 cents for.
Wow.
And when it was trading around $40 GameStop last week. The $6 calls were trading around about I think they were trading about $25. So that's before this week's spike. So I'm sure they're trading about $125 now. But he had a
hopefully he took some off the table when they went to $400.
Yeah, I think he did. But he showed him long about a couple of million quid's worth, around $25 or something like that. He sort of like rebought, stuck another couple of million quid in. So it showed his position as about being up about 15 million.
Wow.
And then so that's before it just jumped another $100, so or $150. What's it trading now?
I don't know. Let's have a quick look. I know. Don't even know, to be honest.
No, I've got it somewhere. Can't remember where I got
it. $108. Did get up to $183, but at a fairly substantial dip intraday.
Yeah. So I think basically there is. It still feels sort of like a little bit of a blip up. I don't think the value of the company is probably as much as that, because the owners said it wasn't.
Yeah.
But you can't sort of stand in the way of things like that. It's very volatile. But Yeah, I mean, the indices definitely had a bit of a move. Shall I just run through them?
Yes,
quickly?
please.
One interesting thing to mention is FTSE had a really big spike in the last hour. We're seeing buying coming in. You can see this is the hourly chart up here. Let me make it a little bit bigger for you. Nice little spike up. So trading around 65, and we've spiked in the last hour 640. So that's interesting. Have we seen the same in DAX? We have.
Indeed, we have.
So these are spiking into what I would call good resistance levels. So potentially, if you're convinced by this equity sell-off, these would be the levels to sell around. Look at this big, thick, nice cloud cover. From a cloud trading system, that's where you'd like to be getting short, although you physically you should have been short maybe back here at this level, so you'll be getting short a little bit higher than where you are originally short, but you've seen it down to this down to the downside a little bit. Same in CAC, and all the indices, they're all having a little bit of a spike, and apart from China 50, funny enough, rolled into that one with the gun to the head challenge yesterday. I don't think I managed to sort of a bit of a profit on it, but not as much.
0.84, I think.
Yeah, shame. But it's sort of like carried on overnight, so China sort of looking a bit sickly. But popping back to the indices, there's some interesting. I think it was Nasdaq I was looking at. Yeah, Nasdaq. The weekly chart. From this rally here, from this swing low here, we've drawn a bullish channel, and it's hit it 3 or 4 days. So a decent bullish channel, but now look, this is weekly chart. This week we've broken through it, and we can consider that broken. Now, if we want to redraw the channel, just to sort of take into account the second low, let's get this right. That's still a decent break. That's 1, 2, 3 points, and that's broken, and that looks likely to close below that bullish trend channel. The next level we've got to watch is the 12,466, which was a swing high, which then acted as support on a couple of occasions after it closed above it. So that level there, and then the next real upward trending support line comes in at 11,600. But we did talk about the I thought we were talking about a bit of a target of about 12,000 really, if we look at maybe the 4-hour chart. Let's get rid of these lines down here. I think it was a fib retracement level. Let's get it on the daily, be a little bit cleaner.
You're going from the March lows?
Yeah, it's only a tiny retracement really, isn't it?
I mean, the advance has been a pretty parabolic one, hasn't it? And it needs to have a bit of a wash, doesn't it? I mean, down to 38.2 would be all right, wouldn't it?
Congestion down there as well.
Yeah, exactly. So we got this like price action congestion here. That's 11,129. Yeah, sort of almost like a topping formation. Maybe it could do with a little bit of a forming a right shoulder, although I think,
a retest maybe.
Yeah, I think that was a bit of a dodgy head and shoulders formation that might have drawn. So say we take it from the swing low here, and then sort of take that low, that as the right shoulder.
Yeah, that'd be nice.
I think that was the one that I was looking
measure
at.
it up. I bet it's 38.2.
Oh, look at that. He's fucking betting on it before.
He's bullish, isn't he?
Maybe
well, he's not. He's bearish.
No, not quite.
Yeah, 11,590. So yeah, looks a bit. I think if we get a break of this 12,735, it does open it up a little bit. We've got spring lows here, all the way down to 12,200. So there'll be some sort of support, but it doesn't look great really. So I wouldn't be surprised. It's not going to be a straightforward through there and see you later. Especially with the sort of like the other indices offering a bit of support down here as well. But yeah, maybe one of those topping formations that happen and sort of catches a lot of people by surprise. But everyone's been talking about the never-ending indice rally, and that it's going to continue. A lot of people have been loading up on stocks, and so when it gets to the last people in the room, the retail traders, that's when you sort of like seem to get caught out. So yeah, no one's ever seen a sort of like, I think that this generation traders haven't seen the sort of like collapses that we saw in the late 80s and the 2000s, the dot-com bubbles, and the even the 2008 sort of sell-offs. They had a bit of a show of it last year when we collapsed due to the pandemic, but that came back very, very quickly. And in a market where we could see a big sell-off and the retracement take a lot longer, it's not as pretty and it's not as enjoyable. Moving on to crude oil. Crude oil continues the sort of the bull run. No real sort of like levels to get too excited about on a short-term basis. We're still looking the 78.6% retracement at $62.50 in the WTI crude oil. We're still looking at these swing highs of 65.21 and 66.50 before the projected measured move target up to 67 or $68. So that still looks quite handsome, the oil market. Gold, though, we've had a bit of a sell-off in the gold, and we've formed a new swing low. Coming in at 17.55, that broke this 17.60. It's a trade I've been talking about for a while now. So still, just to remind people, I expect this move lower. I've been looking for this move lower, but I think it's a buying opportunity. I really don't know where the bottom will be, but it's forming a bullish flag. So my long-term view is higher. Short-term, I'm sort of looking for this. We've obviously had a rally in the dollar, which has impacted on the price of gold. That moves it low if dollar goes higher. Yeah, I think we've got nice congestion area just below 1680 up to 1700. 38.2% fib retracement. That horrible blue color, get rid of that. Is coming in at 1725. That would be my next targeted move, and then this level here, 1670. Potentially still within this bearish channel, which is forming the flag, because you sort of like, for me, this is the flag formation, and wherever this sell-off stops, so say it was to stop around the 1670 level, huge. My targeted move would be $2,500 in the gold. So that's a long-term view, and that could take a couple of years to play out. But you never know with the markets these days. Some of these moves are happening a lot quicker than that.
Is silver the same, Steve? Or?
Silver, I think silver for me is. I mean, it is. It really. It doesn't feel like as sort of bearish at the moment. If anything, it's like it's this channel formation, which I think the same thing. It's a flag with the flag here. That targets a move up towards $40, and again, that sort of we've got a 78.6% retracement of this move lower, which happened over a period of over 10 years. Well, less than 10 years, so that's 9 years. And I don't see any reason why this doesn't get back to these sort of levels, if not higher. That's my own view on it, and that's where I sort of think that we have a bit of a dollar crisis.
Yeah.
And that's where cryptos also benefit from the dollar issue, which for me is, a break of this 88.25 level potentially, and then a revisit to this 70 level. That's where that's where the feeling is. I don't know what will be the catalyst, and I'm maybe proved wrong, but instinctively that's what it feels like, and the technicals are lining up with that. But
yeah,
we'll see. Yeah, I think just one thing, copper. We have had a little bit of a sell-off from the highs. Whether we're targeting a move up to 465 in the dollar, a little bit of a pullback in the last couple of days on there, but opportunity to buy. I think copper still has a big story, a big part to play in this.
Thanks, Steve. Ian, do you want to share your screen so we can have a look at your charts this morning?
It'd be like nice holiday destinations and things, wouldn't it?
Yeah. You're on mute.
I thought he was getting emotional there. But
Yeah.
it's just he's on mute. I thought his mouth was.
No, I'm saving the speech. I'm saving the speech for later when I've had a couple of beers. Dollar index, we got the move. So basically, it wrong chart. This one here. It did make a perfect or near pip perfect Gartley formation, and it's moved to the upside. The only caveat I've got for this, I mean, and other yen bar, other risk currencies, i.e. the Swiss franc and the yen, are both moving in the same direction, so they're both moving to the upside. But the only sort of caveat I've got here is that the dollar index, when we look at DMARC, and I do look at DMARC a lot, on the long-term charts, there's no real sort of indication that the dollar wants to stop. So I'm not saying this is going to happen, but if you then take that chart that we've just had and you use the 78.6% as a base, then that would highlight that this whole move down is just the first leg, and we could potentially get that. So at the moment, I think, yes, you've got to buy dips, especially when we look at the FX majors and we look at the zones that it hit yesterday. But I don't know, really, it's got to break this previous high, which is 91.60, to confirm that this is going to continue to the upside. Otherwise, we could get a dip lower. And remember, we've got non-farm payroll next week, and I'm wondering whether or not we might drift into that and then get a move up. But at the moment, we've been waiting, it seems like a couple of weeks for that move down to that 78.6% fib, and it is bullish. And I think the call today is to buy into dips. If you get a dip down towards sort of 90.10, if you look left on the chart, that's a very good confluence area, or it was support on numerous occasions. So I think that would be a decent area to try to get long. If we then reflect that back on the majors, so the big picture analysis still for euro dollar is for quite an aggressive move to the downside towards 117, the figure. This leg, it normally gets to 88.6, which is why I'm a little bit wary again about that dollar push. But at the moment, we've posted a very nice rejection candle yesterday. If we get a close down here, we've got an evening doji star, and then I think you've got to really look at setting long-term shorts for a move down towards 117, the figure. And if we go to this chart here, we talked about this yesterday. It virtually made a pip perfect AB equals CD corrective formation. So at the moment, the outlook is bearish. If you remember before, we did say that this area here, 123.04, the 88.6% pullback level, is prime, and we are getting a move higher in stocks this morning. So we are seeing a bit of a correction to the upside in euro dollar. Cable, and again, I think you've got to look at big picture. I think sterling, as I said before, is the weakest of all the majors at the moment, and that is reflected in a very decent move to the upside in euro sterling, which Joe caught yesterday. I think on an intraday move, this is looking, so we had a 261.8% extension on the 4-hour chart. I think on an intraday move, this is looking oversold. If we get back towards this swing low at 140.82, again, I think it's worth a shorting opportunity. I think a top is in place now for cable. Dollar Swiss, and we mentioned this again yesterday, it's a hard one to play when we've got trading dominated by risk on and risk off and not single currencies. because obviously dollar and Swiss are both risk assets. So all we're getting at the moment is just a move to the downside. Swiss does look like it wants to take a decent move higher. So I think we could have completed this, but I think we really need to get a decent break of yesterday's low to continue a move to the downside. Dollar yen, and again, it's sort of a bit of a broken record. I still think this level here, it's not tracking stocks again, which is a bit of a concern. Obviously, when stock indices move to the downside, you normally get a move lower in dollar yen, and it's just holding up. This is the 8-hour chart. We're just getting doji candles or spinning tops at the moment. I still think this level here, 106.50, 106.60 is a prime short entry level area. This did hold yesterday, so and we have got a bullish outside day. It's 261.8% at 125.21. It overshot it. We have got a bullish outside day, which sometimes indicates the end of a trend and the start of a new upward bias. But oil still doesn't look like it's going to slow down. And if we go back to this that we talked about, it did spike down towards that first level, but this second level is still prime. So again, I'm not sure if this dollar move is truly finished yet. And I think we could still see a move down to 123.45. So I'm a bit cautious, should we say, at the moment. Great risk off pair is Aussie dollar, 261.8% at 170. At 79.03. We have got a bearish outside candle, but again, looking at the baskets, it really doesn't. It's been dominated by the dollar. It's not been dominated by Aussie, and I think we could still get a correction higher. Would maybe look at a sort of head and shoulders pattern. I don't think this is going to hold the outside day, but we'll wait and see. Euro sterling, we have got a morning doji star that we talked about yesterday. We said if we get a close above there, I would be cautious on an intraday basis. We are getting towards a 261.8% fib, so it could be the completion of a 5-wave count, and then I'd look at buying into dips. Sterling Swiss is -1 correlated to Euro sterling, and if you notice here on sterling Swiss, we have just hit a 261.8% fib, and we've made a bullish outside bar on the 1-hour chart. But the long-term bias, if you look at these big charts, the long-term bias, I believe, is really negative now for sterling Swiss and bullish for Euro sterling. So I wouldn't look to buy into a correction higher. I'd look to sell into the correction higher. And then Euro yen, I can't really get a handle for this. I had this on yesterday. It is a confluence area, but that is not really relevant. And again, yen hasn't got any indication as far as DMARC is concerned that it's going to falter yet. So I'm just wondering whether or not this is going to spoof a few people, and this is wave 1, wave 2, and this is actually wave 3 and 4, and then we'll push up to maybe 361.8% as wave 5. I don't think that the stock indices are quite done as yet, but we'll wait and see. That's me.
Lovely, thank you, Ian.
Yeah, thanks. Right.
Did you have fun with those currency indices yesterday that we spoke about? Did you ever look at them at all?
Oh, I did, but there's too many gaps on them.
Yeah, you're better off looking at line charts on those, I think.
Yeah, these baskets that you've put together, they seem quite true. I mean, this is a yen basket. I mean, look at that for 261.8% yesterday, and 94.02. Whereas if you go to these other baskets, and I did do the list. Is that the yen?
Yeah.
I mean, I can't get to grips with that.
Yeah, fair enough.
Yeah, look at it on a line chart. Yeah, you see what it looks like on a line chart. Yeah.
Click on the candle to the left.
Good job. Where?
To the right.
Next to the D.
Yeah.
I've never looked at one before. There you go.
Yeah. It looks a bit better than looking at the candles.
Yeah, I think for what Joe was looking at yesterday, which is obviously this conversion and divergence of single currencies, I thought that looked great.
Yeah, but just like that. I can set one up for you if you want.
But I think there's as a bar chart, I think it's a bit shite.
Yeah. Okay, great. Well, thanks for the update on the FX markets. I look forward to doing those myself next week. I don't think they'll be as
Good luck.
I don't think they'll be as comprehensive, but
I'll send you my notes, shall I?
yes, please, if you don't mind. Okay, so gun to the head challenge from yesterday. We had 3 winning trades, which is nice. So we had a euro sterling, which hit target, 2.71 R.
Well done.
Steve, you had 0.84 R on China, and Ian managed a 0.15 R on theta.
Nice of you to join the show, Joe.
Yeah, been a while, hasn't it?
Yeah.
But hopefully that's the worm has turned now, and we can expect some monumental gains over the next few sessions. Any of you got an idea that you want to share with us?
No, nothing at all.
What's the overall league table? Because I want to know sort of like how me and Ian are doing.
We just kissed and said goodbye, Steve, which is quite apt, really.
Fuck it, did we?
I'll be around your house later on for a proper one, but
I'm just looking at it thinking, should I just leave it there now? Just like leave a small gap? Otherwise, if I continue, that gap could increase.
can I just send in my trades? Sort of.
Yeah, why not? Yeah.
Do it.
Yeah, we should get it up. Let other people join in. Join the party.
Sure. Okay, so who's got an idea then? Or any idea of what's going on?
Yeah, I have. I've got to do this. Right.
Any idea?
Cryptocurrency. It's over. The party's over.
Oh no!
You've heard it here first. You've got
to get all sorts of people writing in now.
I'm going to put it on my bio.
Strippers turned up.
Little minus sign cryptos, and you see what happens. So get short now, and I'll do it about 10 o'clock. And obviously be hauled up in front of the SEC or something for.
Nah, it's unregulated. Don't worry about
that. Yeah, this week we're finishing the Bitcoin is finishing a weekly bearish engulfing candle. Last time we did this, way back here, 18th of December 2017, just before we hit the 20,000 level. And we had the weekly bearish engulfing candle, and we saw the price drop about 80%. So, actually, more than that.
Where you setting your target?
85%. Huh?
Where you setting your target? Naught.
No, around about sort of 1,000. How long we got? Does it have to do it in the day? I might struggle with this one.
Naught.
Well, don't laugh about naught. That could happen. Right, and also go on the daily chart. This is hanging. This is
it can't happen. I'm just about to buy some.
Yeah, no, don't do it yet. Yeah, don't do it yet. Save your cash. Do not buy
theta, isn't he?
No, don't buy theta.
No, I'm all in theta.
I mean, that looks.
I've got to do it. I've got to support my pals.
No, so I think it's the end of the party for cryptos. I think we're going to have a decent retracement now. You heard it here first. And second and third. Right, 4-hour charts. On an intraday basis, look at the volumes are quite serious and the price hasn't bounced. Normally when you get a high volume spike, we see a sort of push to the upside. It's continuing lower. So I think there's a bit of profit taking going on from the powers that be who control the world. Right, let me sell it here. And obviously for intraday purposes, I'm going to target the 38,500 level. Ideally, just a caveat, I'd like to sell it around here, 50 to 52,000 and have the stop above 60,000. That's where I'd really like to do the trade. I mean, you can do it, sell it here and it just, it stops, the risk reward isn't as great. 52,500. So my target has got to be. Target's got to be a lot. I've got to do a really tight stop. 48,000.
I'm due to retire today, not
282. And I'm going to target a move to 38,282. So we'll get a nice round 4-to-1 risk reward. Selling Bitcoin at current levels, 42,282. Stop at 48,282, so that's 2,000 tick stop, and a target in 38,282. That is an 8,000 tick target. Where's your house? Sell your house. Put your house on it. No,
Wow.
don't do that. I was only joking.
I'm going to get called back next week.
Regulated advice.
I'll be called back next week when Steve gets chucked off the show.
Okay, Ian, you got one for us?
I think it's risk on day. So Aussie Swiss taking a really decent dive to the downside and hit a 38.2% fib. So I think we're now going to get a correction high, and look at those stock indices, they do look quite aggressive. So I'm going to go for a risk on day fib retracement, and I'm looking for a move up towards this, back up towards this sort of level with a tight stop. I'm going to go super tight. Glory.
Nice one.
70.77, targeting 72.20. A stop at 70.57. Gives me 7.15 R buying Aussie Swiss.
Good luck. Okay, I'm going to take a look at New Zealand dollar, US dollar. Bit of a correction down. Overall, still think dollar looks weak, and these currencies, Aussie dollar and New Zealand dollar, still look quite strong. So if there is appetite for risk still, then I imagine this will be bought up at some point. So I'm going to buy at 73.52. Stop loss 73.25, quite tight. Ideally below this spike is where I should have it, but for the purpose of getting some decent R out of the trade, I'm going to have it there. Targeting a move to 74.55. So looking for 3.6 R on that one today. News-wise, what have we got? So we've got 130 US personal income and spending, and then at 2:45 we have US Chicago PMI to watch out for. Anything else you guys can see of note?
Loads out this morning already, haven't we?
Does that explain why we've seen these big moves?
I don't know really. Consumer price, individual countries, so no combined, but it's pretty mixed bag out of Europe, isn't it? Switzerland, GDP worse than expected, blah 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 blah. So Ramsden is speaking at 12:30.
Harry
Ramsden. And nothing else. That's it. Really boring. But you have got China Sunday night, giving them 3 stars there, manufacturing, which could be through the roof the way they're going.
So it could be off to a rocket-propelled start on Monday morning then.
Yeah, China... maybe. Yeah, I wouldn't leave anything on over the weekend anyway, especially indices based.
Okay. Cool. Right. Well, end of an era then.
Indeed.
Yeah. Thank you very much, Ian.
Yeah. The champagne's popping in a minute.
Yeah. Good. Crack on. Yeah. I'm sure we'll catch up at some point. And
good luck, boys, as well.
Yeah. Cheers.
It's been a pleasure.
Cheers.
Thanks. Right. Let's. Well, Steve and I'll be back on Monday morning, and Ian, you have a fantastic weekend. And lay in on Monday morning, and we'll catch you soon.
Yeah, I've not had one of those for quite a long time, so I'll enjoy it.
Definitely.
Right. Cheers, guys.
Bye bye.
Cheers.
Bye.